Welcome to Venture Podcast, presented by VNTR, the world's leading investors community, the place to learn from VCs and capital allocators.
And I say the best way to learn to get your sea legs is to go and invest in a venture firm or startups that are in the sector that you're in, because that's the best way to. And then when they do that, it's fascinating how quickly they become so confident because they understand the industry. And in that time, he led the acquisitions of maybe like 150 or 200 acquisitions, but 3 of them are DoubleClick, YouTube, and Android, which are 3 of the most successful acquisitions of all time. And he's probably, I would argue, the most successful M&A professional of all time, corporate M&A professional, corp dev professional of all time. Because in his tenure at Microsoft and Google, he created almost $1 trillion, if not more, of value creation for those 2 organizations.
Hey guys, welcome to VNTR podcast. Today we are hosting Asher Siddiqui, GP at Sukna Ventures. Welcome, Asher. Please share your background and we will get started.
Hi, Yuri. Great to be here, and hello to everybody else who's watching. My name is Asher Siddiqui. I'm a general partner at Sukna Ventures. Sukna Ventures is a MENA-focused VC fund, early stage VC fund. I guess you wanted me to tell you a little bit about my background. Yeah. So I actually started out in the late 90s, my professional career. In 1998, I graduated from university, and I already had some experience, building my own businesses on the side as a young man. And I realized that the UK was not for me, so I packed my bags and I moved to the US. And I spent the next 8 years of my career bootstrapping my own businesses. I was a Java developer, so I built Java applications using Java Server Pages, J2EE, web-based architecture, and I sold long-term contracts. So I guess today you would call those subscriptions. So I was basically building, early SaaS businesses. I bootstrapped them to a certain point, and then I didn't know how to raise money. So for the first 8 years, I kind of had, a collection of products that are that were sort of bootstrapping themselves and sustaining themselves and sustaining my lifestyle. I was a sort of a digital nomad, so I could live anywhere. So I lived in like 8 different cities around the US. And then I thought, I should do this from anywhere. So I went back to the UK, then went to Europe, and then I ended up in Dubai and kind of liked it in Dubai. Started working for myself, but we're dealing with my customers in the US and Europe. And just when I was ready to leave Dubai, I met this girl from Hamburg who was there, and I thought I needed to stay. So I needed to decide what I wanted to do. So after 8 years of being an entrepreneur and independent, I kind of started looking for a job, and I've never actually had a job so far. So I got really lucky. I ended up meeting somebody in an elevator in my apartment building where I was living, and he worked in Etisalat, and he was like, he was in corporate finance, and we were like, we're looking for people in M&A, and I'm like, I have no idea what M&A is. So I went for the interview, and clearly they were desperate because I got the job as an analyst. So in 2006, I joined as an analyst, mergers and acquisitions analyst in Etisalat, which is one of the largest telecom operators in the world. But this is early in the M&A. Etisalat hadn't done a lot of M&A so far. We were building out our M&A team. I was in Etisalat for 10 years. 3.5 years later, I was co-head of M&A, and 4.5 years later, I was a global head of M&A. I co-led $15 billion worth of M&A transactions. And, I loved what I did. I found out that I had a passion for investing, and I really was good at it. But, I still had a passion for being an entrepreneur and also love technology. So I kind of wanted to do something around technology investing. And now I thought, so the first 8 years was entrepreneurial. Then the next sort of, 10 years investing. around 5-year mark of Etisalat, I was like, okay, how do I combine my love of technology and investing? So I started the corporate venture capital platform in Etisalat, and we looked to invest in funds globally, VC funds, and also do directs. I found that it was quite challenging. Corporate VC is quite a challenging thing to get off the ground. So after several years, when I hit my 10-year anniversary, I was like, that's it, I'm done. So I left. I thought that was a good time to leave. And then I joined 500 Startups. I moved back to San Francisco. I joined 500 Startups as part of the managing team there. I co-led the firm for about 3 years. And then since 2019, I sort of left the firm and I went back and focused on the Middle East. And since then, I've helped to co-found or help to incubate 6 VC firms in different parts of the world, half in Silicon Valley, half in emerging markets. Sukna Ventures is one of them. And yeah, I guess that brings you full circle. Sorry, that was a long-winded story, but I guess I'm old and been around.
No, it's amazing. Great to hear the serendipity that life brings. You could be anywhere and you happen to be in that elevator.
Yeah,
that changed your life or put you on that path. Yeah, that's great. So maybe we can when you were entrepreneur, did you ever build a team, or it was just you building little apps, or what happened?
So I built teams, but remotely. So initially it was pretty much a one-man show. So a lot of these solutions were me as a one-man show sort of selling a solution or coming up with a solution. But then obviously to build and maintain these businesses, these products, I needed support. So I worked with, people that I met and help them to help me find support in the sort of development team in India and in Pakistan. And then I sort of like manage them from afar. Build remote teams, build distributed teams, and had co-founders in different parts of the world on different products. I wasn't like a one-man show in all of them.
And at that time, you didn't have Zoom, you didn't have proper tools like maybe Skype a little bit. I don't know, ICQ.
We had ICQ. So, in those days, it was very much, we had AOL Messenger. So we had AOL Messenger, we had ICQ, and there was a couple of other tools that we did have. And then, when it comes to dealing with your customers, it was really old school. So I had, in those days, you had these solutions where you could actually get an internet phone number. And so you would get an internet phone number. So I had a phone number in the UK, phone number in the US, and people would call it, and it would either connect to, if I was available, it would connect to me, or it would just go to voicemail or fax. So I kind of.
You're also pioneer of remote work and digital nomad.
So, I didn't think that I was an early digital nomad and a remote worker, but I like a couple of years ago, I was talking to some entrepreneurs and they were describing what they were doing. And I was like, yeah, I think I understand that. I get that. I didn't, honestly, initially, I thought I wouldn't understand how this would work, but yeah.
You've done a lot of investing across different asset classes, different regions, different sectors. I'm going to ask you an unfair question and say, what advice do you have, given that you've had such a wide kind of experience base? What kind of advice do you have for other investors?
Other investors from specifically any advice or for different regions?
I guess so. Yeah, I guess so. Just very broad advice, kind of things you wish you could have told yourself right at the beginning.
So I think the one advice that I would give myself when I was sort of transitioning into investing and then transitioning into venture investing is, don't underestimate what you know. Now, obviously, if you're fresh out of college and you know nothing, then, you probably know something. But my point is, like, at every stage in your life, you have accomplished something, you've achieved something, whether it's something small or something big. And I think when you switch from one career into another career, you kind of discount everything that you've done. But the reality is that everything that you've done so far, everything that you've learned, every person that you've ever met, every person that you've ever hung out with that has taught you something and is part of your network actually could potentially help you succeed in your sort of next phase. And maybe I'll give you a little bit of story. So, when I switched, this was a big jump for me. So, going from being an entrepreneur to Etisalat, there I didn't know anything about M&A, mergers and acquisitions, corporate finance. But I had a really interesting interview with the CEO of Etisalat International at the time. His perspective actually helped me. So he was asking me these questions. He's like, do you know how to, what do you know about financial due diligence? So I was like, I don't. What do you know about due diligence? So I don't. So what do you know about this or that? And then he sort of like, instead of like kicking me out of the room, he sort of like thought about it. And then he started asking me, okay, so what did you do when you were at these companies? When you were building these companies, did you have a plan? I said, yeah, I mean, I built a business plan for my product and to see how far it could go. He was like, how did you build it? And I was like, well, in Excel, how did you make your assumptions? And I was like, well, I did my research. And so he kind of talked me through it. And then he helped me to understand that everything that I had done as an entrepreneur had taught me to assess market opportunities and investment opportunities, because basically I was an entrepreneur and it's all about, me. So, the first investor in any startup is the entrepreneur themselves, because they are the original initial investor. And I had this investor mindset because to me, it was like, if I was going to go after this opportunity, there was an opportunity cost. I was giving up on 5 other investment opportunities that could sort of make me money. So I used to think like that. And that's how I used to assess all these ideas. Then ideas, would this idea ever make money? Most ideas don't make money. Most ideas are amazing, but they don't actually make money. I was always trying to figure out how do they make money. Anyway, so I guess what I'm trying to say is that was the biggest jump for me. And I learned that lesson. And that's where I realized that I was actually good at, I was sort of, I guess, well equipped thanks to my boss, Jamal Ajarwan. I was equipped to sort of bring my skills. So I had a lot more confidence going into Etisalat because I was like, well, I actually do know something. I've been the CEO of a business or whatever. But when I switched from being, this big guy in Etisalat, head of M&A, billions of dollars, checkbook, all of this stuff. And then when I switched from there to venture capital, so to Silicon Valley, I was really intimidated because I was like, what do I know about investing? Until this point, I had done, as I said, $15 billion worth of M&A, and I'd done maybe $50 million worth of direct investing. And I thought I knew nothing. And when I came to Silicon Valley, I was talking to my colleagues and I was like, well, I don't know anything about venture. I'm learning. And obviously we're all learning. What I realized was that most of the people around me also were learning and maybe had done less than I had, but they had this confidence about what they have done or what they'd done before. And so I was constantly second guessing my own experiences and my own knowledge. I went through this VC Unlock program at Stanford, which was part of the Etisalat the 500 model. And I was talking to one of the Stanford professors who was teaching there. After I sort of, we tell each other about our backgrounds, and he was like, Asher, why are you on that side of the table? You should be teaching this course. And funny enough, later on I did teach the program, but I think there's this lack of confidence, right? And so my point is, like investing. So if you want to know VCs, I talk to early emerging managers all the time, people who are thinking about breaking into venture capital. And they're like, well, I don't know anything about venture. What's tragic for me is the people that have the most confidence have the least experience. But the people who have the most experience question themselves constantly. And I'm talking about people who have operator backgrounds, people who've been in corporates, or people who've had a job and have had a profession, have had a career, have had a 10-year, 15-year career. And then they're like, well, now I'm going into venture. I'm sort of becoming, they feel like they're going back to becoming a toddler in their diapers. And so to me, it's like what I tell VCs is that investing is the easiest part of venture. The hardest part is figuring out what will work and what will not work. And unfortunately, that takes a lot of gray hair and experience, life experience, not even professional experience, but life experience of just having met lots of people, being able to develop a pattern recognition for when somebody is, bullshitting you, it's just all those things. It's like, so there's all these life experiences and professional experiences that we discount. And the reality is if you discount them, then you're not going to be a good VC. But if you look at everything that you've done so far and then you bring them in. So when I talk to, say, family offices who are looking to do venture, to invest in venture, the first thing I say to them, and they say, oh, we don't know anything about business. We don't know anything about venture. I'm like, sorry, you're a family office that has created sort of huge amounts of, net worth for your family. You do know something. They're like, yeah, but we don't understand the venture asset class. So then what I do is I typically help them to understand the sector that they've created their wealth in. And I say the best way to learn to get your sea legs is to go and invest in a venture firm or startups that are in the sector that you're in, because that's the best way to. And then when they do that, it's fascinating how quickly they become so confident because they understand the industry. And what they realize is that when they're talking to professional VCs with, multiple funds under them, those VCs are tapping into them for their sector experience and their domain expertise, because that is really hard to build and develop. It actually takes a lot to build sort of domain expertise. It's easy to learn investing.
It's a great mindset, kind of, or like it's easier to understand. Like you did outline greatly. I think the kind of and many people are afraid to go into venture, and I think that this advice is great. Kind of focus on your strength and look there, and it's kind of. If we go back to Etisalat, it was kind of you grew with them. It's kind of They didn't have the M&A department. So what was the strategy for you? How to identify what to acquire, and it's kind of how did you guys decide? Okay, let's expand here, let's expand there, let's buy competitors or adjacent technologies. So how did you strategize on that?
So I created several sort of investment strategies. I'm not sure I could speak about them given that we were sort of a listed company, but I can tell you, I think maybe context is important. So first of all, it's not an individual sort of thing. This is when you look at M&A is a strategic sort of function. So by definition, this is not something that comes it's not an ad hoc thing. It's something that typically happens as part of a broader strategic overhaul. So I guess the question that I would sort of maybe answer for you is, why did Etisalat get into M&A and why did it do what it did, right? Mm-hmm. And I think in that context, it also makes sense why I got the job in Etisalat. And it wasn't as simple as me being at the right time, at the right, sort of being in the right place. It's also that the timing was perfect. Yes. So, Etisalat was the incumbent operator of the UAE, and it was the monopoly, state-owned monopoly. And what happened was that the government was thinking about liberalizing the telecom sector in the UAE, and Etisalat, the first thing that the board of Etisalat thought was like, okay, if there's competition, so far we've had no competition. If we're going to have competition, then how do we grow as a business and sort of create value for our shareholders? And so that's when sort of, they hired, the McKinseys of the world, and McKinsey came and developed this strategy. And the strategy was that if you're going to face competition in your local market, maybe you need to start looking at diversifying your sources of revenue and expanding, because your home market is going to be under attack. And so that was sort of like the very 50,000 feet view strategy. And in order to do that, you need to have an M&A function. And so initially the plan was actually not to have an independent M&A function. Initially the plan was to create a subsidiary called Etisalat International. And that Etisalat International would be this entity that would invest, own, build, and operate global, telcos outside the UAE. That was and it would be owned by the UAE. So there was a diversification thing. And this happened sort of, in the early 2000s. When I started looking for a job, my first kiss with my now wife, by the way, that worked out, that Etisalat thing in many ways, was on the 8th of February, 2006. And my first day at Etisalat was the 8th of April, 2006. And I know that people are thinking, that's insane. Etisalat, within a few weeks, you got a job, interview process and everything. So think about where we are, right? So 2006, what was going on in 2006 in the global market? So there was a financial services boom. What that meant was that if you are a young finance graduate or a young finance professional, where do you want to be? You want to be in the centers of where the centers of finance are, which is London or New York. And if you're not good enough, Hong Kong or Singapore. DIFC did not exist. There was no sort of financial center in the Middle East. Bahrain was sort of like, trying to build one, but it was really early days. So, and one of the most common sort of responses from candidates that I heard later on was, when we were trying to recruit people, was like, so where's the job? Abu, where? And, now I think you mentioned Abu Dhabi, everybody knows where Abu Dhabi is. But at that time, it wasn't really known. So they were, they were struggling to recruit. So the strategy that they had within Etisalat was, let's retrain internal people, and let's hire people that can be retrained, that have the potential material. So I was really lucky, because they were looking for people like me that were flexible and adaptive enough, that and clever enough to learn.
Entrepreneurial as well, probably.
Entrepreneurial. And I was also lucky because if I joined the M&A function of a corporate that was basically transitioning from a ministerial type company into a private sort of company, I would have struggled. But I was lucky because it was within Etisalat International. And Etisalat International was kind of like a startup within a large company. So we had all the benefits of being an entrepreneurial startup with all the flexibility. But we had also the benefits of having a large corporate owner that had, deep pockets and lots of, like travel expenses and all the perks that you get with it, with none of the sort of the issues that come with it. So getting back to your strategy question. So that was the overall strategy. I joined the Europe and Asia team. So when I joined after the strategy work had been done, and we had decided, okay, we're going to go and diversify. So then the question was, where do we go? So we had this global mandate, but when I came in, we sort of thought about who we were as a company, and what was sort of our DNA. And so, initially we had a global mandate, but over time, what we realized was that we were an emerging market company, and we knew how to operate in emerging markets. So emerging markets was sort of more, a place where we maybe could have influence and would know how to navigate. But what was interesting was that the UAE market is actually similar to a European market in some respects, because it's like very high penetration. and profitable, high GDP per capita, so high ARPU markets. So it has European characteristics, but with this emerging market sort of flavor. It's a small market. So we were thinking. So when we were looking at sort of investing in sort of African companies or Asian companies or Middle East or Europe, we had a different strategy for all of those. In growth markets where there's still low penetration and a lot of room for growth, it makes sense to build out. And if it's a local regional sort of market like Egypt, it made sense to do a greenfield because we speak the same language. It's only a few hours away. We have a lot of benefits. We understand the market very well. And so it made sense for us to go greenfield. In Saudi Arabia, Mobily was also the same thing. Very similar culture, market, language, etc. So very easy to go greenfield. And so we went greenfield in both those markets and we were very successful. In other markets where maybe there are fewer cultural similarities or language or distances, then it made sense to go and acquire. There's many sort of aspects I can go. We can maybe pick a specific acquisition. We can talk about it, but
So it's kind of a lot of companies fail with their M&A strategy, right?
True.
Or they fail with the corporate innovation or even corporate VC. So what made you guys successful? Or like?
Yeah, so the reality is no one is successful all the time. There are projects that you are successful in. So there are projects that I'm very proud of that we were successful in. And there are projects that we weren't. It didn't go our way. But yes, as a portfolio, yes, we were very successful. I would say this is not true of Etisalat, but it's true of all M&A and strategic activities, whether it's M&A or innovation. Execution is everything. You can build the best strategy. You can execute the best strategy transactionally. But if you don't operate and execute it well, then it doesn't matter. So I guess the point that I'm making is that there are areas where there are times when we bought good assets and we did not operate them well. And so we destroyed the value. When I say we, I'm not absolving the M&A function of responsibility, but my point is that M&A function can only do one thing. We can do the transaction part, we can buy the right company. But if you don't send the right CEO, and what I noticed was, what's interesting is it's the first 100 days that matter. If you can get the first 100 days right, if you get the right team to hit the ground running in the first 100 days, then that builds momentum. And then, mistakes are made all over. That's okay. And you learn from your mistakes. But that first 100 days are so important. What was interesting, just to segue here a little bit into venture. What was interesting was what I found was that the first 100 days after an investment in venture in a startup are so important. The first 100 days create the momentum. And if they create momentum, then you find that this company is generally successful, and the probability of it failing and going to zero. They may fail or they may make mistakes later on. But my point is that the probability of them going completely to zero are actually quite low relative to others. So it's quite interesting what I found there. And as I said, execution is key. So the point is, the best strategy, the best deal, and then you send the wrong team to run it, it doesn't matter. So
integration part is important, right?
Integration is important. Executing, operating is important, and bringing them in from an M&A context, bringing them in early into the M&A team. So for example, Mobily and Egypt, Etisalat Egypt, they're two of the most successful greenfield operations that we created. The CEOs of both of those companies, the initial CEOs of those companies, when they were formed, were actually the project managers on the operations. They were involved in building. Actually, they were both engineers. They were involved initially in building out the network rollout, and then once they had designed the network, then they sort of found themselves in sort of responsible for building the business plan. And because they had done the network rollout, which is basically the first 100 days, that's the momentum that you need. They then started to learn about business, and they started to learn about the business plan and how this impacted that. And then when they went in, initially they were just rolling out. They were just the project manager to roll out the network. But because they understood the business plan, then they understood the differences. They had made choices around the network that were business friendly choices, which meant that they were able to hit the ground running and get revenues faster, et cetera, et cetera. So, and they were very successful. So that is very, very important, right? Getting the right people involved. Yeah.
So it's the same in startups, right?
Yes.
When you invest in the right people. Okay. So at what stage you guys launch corporate VC in Etisalat?
So it was around 2010 that I started working on a corporate VC thesis. It took 2 years to do the research, to socialize it internally. And so it was around 2012 that we started working on this. So actually, I remember, no, it was 2011, because I remember my first sort of external action was to go to the US to the Bay Area, and it was interesting. It was in 2011, and it was in September, and it was there was only one day that I could find empty seats, and so it turned out to be September 11, 2011. So I didn't realize this, but I was like, okay. So I was on the plane, and I was freaking out because I was like, oh no, like, my middle name is Ahmed, and I'm going to the US on the 10th anniversary of 9/11. What an idiot. Anyway, so, but I landed. It was fantastic. San Francisco is a wonderful airport. And I started meeting people, in the Bay Area. So, we met a lot of the top VCs to see if we could sort of start working on allocating, into these venture firms. So that's kind of like, where it started. But what we found was that, we found an adverse selection problem. So look, I knew at this point nothing about venture, right? So I'm still learning. And so I reached out to and leveraged the bankers and the networks, to get myself set up, for meetings with like John Doerr and Vinod Khosla and all these big guys, which is, clearly not the right thing to do in hindsight, but that's kind of what I did. And I met these people, and to be honest, like, I realized in hindsight that I wasted their time. Actually, Vinod Khosla actually said that in the meeting. He said, don't waste my time. In fact, he knew that I'd met John Doerr, and he was like, don't waste John's time either. And he was the one who actually, this didn't come to me then, it came to me later. When I was meeting Vinod, he said, if you want to invest in venture, you need to do the work. And, they didn't care that I came from one of the largest telecom operators in the world with, one of the most profitable telecom operators in the world with billions of dollars of, net cash. It doesn't matter, because capital was a commodity here. Like, capital was easy to get. Opportunity was really what they were after. And also at that time, around that time, telcos were a bad word, because telcos were quite resistant to a lot of the innovation that was coming out of Silicon Valley, and also because corporate VCs weren't a very credible partner for LPs, because what LPs had done, for VCs, because VCs had engaged with corporates before during the dot-com boom, and what they found was that when teams change, where corporate VC teams change, then the strategy changes. And so you basically have a one trick pony or at best twice LP. And so you spend all this time and effort in building a relationship with an LP, and then they leave. And so, GPs need to build relationships with, and LPs need to build relationships with GPs, and these are long term.
You came to deploy capital into other funds to build relationship and co-invest with them. This was the step.
Yeah. So the initial idea was the idea was you need to crawl before you walk and walk before you run. And so the idea was, okay, how do we learn? Let's invest in the tier one VC firms, so our money is safe. And we will then leverage those relationships to learn. And then we will, maybe the next program will be to co-invest. And then the third phase was to actually build our own venture platform, so that by this time, hopefully we'll have a team that knows what it's doing. And it's also aligned with the corporate strategy, and the interface with the corporate. So that was the original plan. So started in 2011 doing that. And what I found was that, the established VCs didn't want to talk to me. But as I was saying, what Vinod Khosla said was, if you want to get into venture, you need to do the hard work. And he saw me and I was looking clueless. I was like, I don't know what I'm supposed to be doing. He's like, you need to attend conferences and you need to build relationships. You can't just come here with a checkbook, And if you really want to get into venture, you need to spend time with the people who work for me. These are his words. And I was like, I think at the time I was insulted because I thought he meant that I shouldn't be wasting his time. And then he said, because if they're any good, they're not going to work for me for long. And he said, because the last time I checked, the name on the door is Khosla. He said something like this. I don't remember exactly, but it was really interesting. Now, I didn't understand that until a lot later. And by the way, it's funny because he has a lot of amazing VCs that still work at Khosla. So obviously, I don't think he meant that none of those guys are, because they're all some of them are on the Midas list, and they're great investors. But I think this
Ben Link started his own fund and left, right? So
yeah, so many. So I think the point that he made was that he was trying to make was that there are people that will work with me and help me build my firm, like David Waden, who's also and several others. And then there are other people who have their different aspirations. Some people are, want to build some, and are comfortable in this setup. Some people have their own aspirations and they want to do it differently. And so they will leave and they will build their own firms. And so, and what's funny is that I've met and I started meeting with some of the associates and principals at the time who ended up becoming GPs at other firms or building their own firms. So, yes, you're right. Very, very. So that was the original thing. And so what we found was that we came back I came back to the Middle East and I started thinking about, what we should be doing next. And I thought, okay, this is going to be a hard sell, going back and forth and trying to build relationships with these Silicon Valley VCs is going to be tough. There again, I made the obvious mistake where I didn't think about, the relationships that I built in the 90s when I was in Silicon Valley. At the tail end of my trip, I had some personal meetings where I caught up with all of these people. And then I realized that these people that I knew, I should have started with them, not ended with them. Because I ended them with them because they were social. But so for example, one of the people that I'm going to mention, he was a mentor of mine back in the early 2000s. His name is Salmanullah. He was head of M&A at Google, and he was head of M&A at Google at a corp dev at a very pivotal time. And in that time, he led the acquisitions of maybe 150 or 200 acquisitions, but 3 of them are DoubleClick, YouTube, and Android, which are 3 of the most successful acquisitions of all time. And he's probably, I would argue, the most successful M&A professional of all time, corporate M&A professional, corp dev professional of all time, because in his tenure at Microsoft and Google, he created almost $1 trillion, if not more, of value creation for those 2 organizations. And he then started a venture firm, and that venture firm is sort of top quartile, consistent, firm here. And I should have talked to him, because a lot of the Google alumni that left then, either joined Sequoia or built their own firms. And so he had this amazing network, and I sort of leveraged his network and other friends' network, because I went the corporate route and leveraged my advisors to get me meetings versus personal relationships that would have gotten me the same meeting with the same people, but these would have been, hey, I know this kid. I've known this kid for 20 years,
Warm endorsement, yeah.
Exactly. And that is so important. And it's so funny for me that to realize this right now is that, even LPs need warm intros to tier one VCs.
That's really fascinating. And I think that brings us nicely to the next section, talking about what you're currently doing right now, so Sukna Ventures. Yeah. So it'd be great just to understand a little bit about your thesis and your strategy, and just kind of the sorts of people that you might want to talk to.
Great. So thank you. So maybe if you don't mind, I'll also tell you a little bit about the genesis of Sukna Ventures, because I think that helps to understand the types of people we want to talk, because we are quite particular about who we want to sort of work with. So initially, when I mentioned to you, in 2019, I sort of went back to the Middle East, and I spent more time in Dubai, but I was still working on helping firms, building institutional venture firms in the Valley and in, in emerging markets. And so one of the people that I was helping was Faris, who's the founder of Sukna. And he was a friend of a friend, and we were introduced, and we started working on. So he was an entrepreneur that had built, a platform which was basically a company builder, a business builder. So he had basically built companies. He was an entrepreneur who, left a 15-year banking career, and then started raising capital and building businesses, and then got them to, becoming sustainable. And these were sort of like, I wouldn't say tech businesses. They were tech-enabled businesses. And what he found was that every time he introduced tech into his businesses, that had a sort of like a multiplier effect in terms of efficiency or sales conversions or whatever. So he started to get more interested in tech. And so when he was talking to one of his friends about, looking to do this, but using tech or software, that's when sort of, I started jamming. And we were building, so we were at the time, I was just helping him figure out how to build technology businesses, which needed, for him to build a deeper network within the tech ecosystem. So this was not a fund at this point. And what happened is that we started working with entrepreneurs to see if there were other people that were trying to solve problems that we wanted to solve, and work with them. And what we found was that there weren't many VCs out there that had operator experience, that had been investors for 10, 15 years, had been operators for 5, 10 years, and had been entrepreneurs for that time. So you didn't have that package within the MENA region at that time, right? And what's nice is that now you do, which is fantastic. But at the time, it wasn't quite evident. And so and one of the reasons was because we used to, do a lot of mentoring and free coaching with all of these founders. And we'd find that our advice to them would, according to these founders, would be very helpful. And the founders would sort of complain about their venture investors, saying, well, these guys are telling us the exact opposite of what you're telling us. And that doesn't make any sense. So that's when we thought, maybe there's a market opportunity here. But the thing is, I'm a B2B software investor. What I like is B2B enterprise software. It's what I know. It's what I know from the 90s and early 2000s. It's what I know from Etisalat. Even though Etisalat telecoms is a consumer business, consumer business, you need to have a nose for it, just like you need to have a nose for enterprise, So I don't think I have that nose. So we were thinking about B2B, and then the pandemic happened. And the pandemic was a huge phase shift globally, but also in the Middle East, because all of a sudden you had all these CEOs and board members of some of the largest companies in the MENA region who were sitting at home with their families, and the only way they could get food was delivery through, this. And the only way they could get services done, the only way they could get book a slot to go do their groceries was through that. And I think that was actually quite helpful. This is my personal opinion, but I think that was quite helpful in changing a lot of the mindset of decision makers. And that, along with the strategies, governments in the region have understood for quite a while that they need to diversify their economies and they need to bring in and foster entrepreneurship and innovation economies. But that doesn't happen in isolation. You can't have one stakeholder doing it. You kind of need to get everybody around. And it became easier for the government to sort of get the industry moving in the right direction. And so that was super, super helpful. And around that time, why am I talking about this? The reason I'm saying this is because around that time, you've got corporates, companies, businesses in the Middle East that are now more willing to talk to startups and try a service, a subscription service, and understand that, hey, it can work. And if it works, great. And if it doesn't work, you cancel it. So that started to happen. And because of that, then people started to leave their startups or businesses and companies and then start building B2B SaaS solutions. And so this started to happen as well. So that's when I sort of pinged another friend of mine, Walid Al-Ballah, who was the a co-founder of STV, which is the largest fund in the region. And he was also thinking about doing early stage investing and working with early stage startups. And he was finding the same problem that Faris and myself were facing. So we kind of came together and we said, okay, and all three of us are mid to late 40s. We've all been sort of entrepreneurs. We've all been in the startup thing. We've all been corporates. We've all done corporate venture or corporate innovation, and we've all done investing. And Faris and I have done more M&A, and Walid and I have done more corporate VC. But we're sort of, but we also come from different industries. So Walid is a semiconductor engineer and is sort of like a super nerd, deep tech nerd. Faris comes from the financial services industry. So he really gets the numbers and he understands regulation and regulatory headwinds very well. And I'm sort of like, probably the least useful one there, but like, I kind of help to gel the two of them because I have a little bit of both. And so the three of us sort of came together and we were like, okay, what are the types of problems that we can solve? And so all of us, we understand how to build and we like to help other people build products and we like to help people create strategies and build businesses. So we're not interested in shiny, flashy things. What we're interested in is real teams that are building a real solution to a real business problem. And they're trying to do it using software and they're leveraging whatever technologies that are available. And, we were focused on, artificial intelligence, machine learning and automation because those are the things that sort of give, sort of pay dividends and sort of create this sort of flywheel momentum in your products and sort of providing a superior service to your customers. That's kind of what we were thinking about. And so that's kind of, I guess, Etisalat's thesis Sukna Ventures thesis is we're investing in teams that are building products that are helping to digitally transform sectors. So we're a generalist fund, but we're quite specific in what we're trying to do. So we believe that there's digital transformation. There's this momentum around digital transformation across all industries. And we're just tapping into this very narrow opportunity, which is like, okay, what are the software technologies that are going to help these traditional businesses become more digital? And so to helping them with this digital transformation. And so what we're looking for is infrastructure layer problems. So I guess the point that I'm making is we're not looking to invest in a new fintech solution that where they can help you manage your expenses. we're looking to invest in businesses that provide other businesses with an expense management solution. Does that make sense? There is a nuance there. So, because the thing is, if you build, so for example, we're not interested in backing payment service providers, but we are interested in helping, supporting companies that are building the digital and financial services infrastructure to enable payment services to become more digital, which obviously helps all payment service providers. But really, the problem that we're trying to solve is helping the large corporates to sort of transfer or their current financial sort of like transactional, the way that they take in money, charge their customers, to becoming more digital and managing that better. Does that make sense? I don't know if I.
Yeah. And at what stage you guys get involved? Is it like early stage, or you want the product live?
So we like to get in super early, pre-seed seed. We are comfortable with working with people at super early stage where there is no product or anything. But at the same time, I just want to say that I'm very skeptical. My skeptical meter goes up, and the bar is really, really high when there is no product. Because in this day and age, because it is so easy and so cheap to build a product, to build an MVP, that to me, if I don't have an MVP, I'm wondering why you don't have enough conviction to, use your own credit card to build the MVP. And the argument that I have, and I know that I see this argument with digital infrastructure players where, they say it takes a lot more to build the MVP of an infrastructure play than it does. And I agree with that, but there needs to be something. There needs to be some form of an MVP, something there before I'll get involved, because I built digital infrastructure plays in 1999 and 2000 when there was, no cloud services and none of this stuff. And I was able to do that. And I was able to do that for $20,000. So if I can build for $20K, then I struggle to see why you can't build an MVP of something that requires more resources and to scale it, but to build it. So I think my point is, initially what I need to see is an MVP and some customer conversations to see that there's some early signs of product market fit.
And like you say, it's so easy to build an MVP these days.
Yeah.
And if the founder isn't willing to put in a few thousand, then it's like they've already answered the question for you, right?
They just don't have conviction around it. Yeah.
Interesting. And as you said at the beginning, they are the first investor into their business. So if they don't believe in it, then they don't. It's kind of, you don't want to also be that feeding fund for their looking for a job.
Yeah, exactly. They're not an investor looking to solve a problem. They're just looking for a job.
And have you got any tips? So working in Sukna, have you got any tips for entrepreneurs who do approach you? Because as a VC, I imagine you have an influx of people coming, wanting to take some of your time, take some of your money as well. So have you got any kind of tips or recommendations for people who do approach you to kind of get noticed?
Yeah. So first of all, there's 3 GPs. So everyone has their own style. And then of course we're the firm, and the firm has its, the front door. And so the front door is easy. There's a form on our website, and also you can send an email to deals@suknaventures.com. So that's the front door. And, that is typically tracked and managed. And we look at that. I can talk about myself. My partners are nicer people than I am. They're less grumpy. They're, much more positive. I think I'm just inundated with emails that I don't respond to cold emails. At least in order to get to me, I find that I don't respond to people unless there is a warm intro. And there have been times, on rare occasions, that somebody has sent me an email saying, so-and-so told me I should connect with you, or I should speak with you, which is great. But that is a signal, because the people that know me, and they know that that is a signal to me that not a negative signal, but it's a signal that they're not sure. So this is not a warm intro. It's a nothing. It's something better than nothing, but it's a signal that says, I don't know this person that well, or I'm not so sure about this. So I guess the point that I'm making is that, great, try that. But in my mind, if you want to get to me, you want to get a warm intro, or sorry, forget warm intros. You just want an intro from somebody who knows me to make that intro. And it's not difficult. I have a very large network on LinkedIn. So go to LinkedIn and, see who you know and find somebody that you know. And now one thing I will say is that obviously, just like everybody else, I've connected to a lot of people because I've met a lot of people because I've been around, this world, for a long time. So that means I know a lot of people, but that doesn't mean I respect or like everybody that I am connected to. So, if you know somebody and you're like, okay, this guy knows Asher and I could ask this person for an intro, but I don't respect this person, or I don't really like this person, or there's something about them that you're not so, comfortable with, then better not to use that person, because who you come through is also a signal to me. And so I know I'm not making it easier, but the point that I'm making is that, we live in chaos, and in chaos, you have all sorts of people with all sorts of frequencies. So, ultimately aligned frequencies will connect, and, diverging frequencies will sort of overlap. And that's just the way that, sort of my view of the world is. And so in my mind, if you find that there's a limited amount of people that you align with, I think over time, if chaos prevails, then you will find yourself connected to me, because I've met so many people who I bumped into, and they said to me, I've been trying to meet you, but unfortunately, everybody that I know that knows you is an asshole. I'm sorry to use that word on the thing. And that makes me laugh. And I'm like, great. So we were meant to meet. So we did. So, in my mind, because, there's similar circles and similar interests and similar things that we will do. So, my point is that happens. But to answer your question, to get to me, an intro, is important. Otherwise, just go through the front door, and somebody will pick it up and somebody will look at it. And
yeah, so even we got connected through Dave's,
yes,
so it's definitely very important for you. And how do you guys operate as partners? Like, sounds like you are in Silicon Valley, but you invest in Middle East. How do you manage this type of operation?
So I mean, it's more complicated than I guess it would be. So I mean, I used to live in Dubai, and I still have a foot in Dubai. So when we launched the fund, I was full time in Dubai. So this move was sort of last year for personal reasons, for unavoidable sort of personal reasons. So I guess my life is more challenging, but we make it work. So both my partners, Faris and Waleed, are based in Riyadh, but they commute to sort of, I not commute, sorry, they and we have a principal, Omer, who's based in Cairo. So we've got those two covered. And then the UAE is a market that I cover. So I actually spent 6 months of the year in Dubai, and then I sort of, go to Riyadh every now and then. And then the 6 months that I'm here, it just means that I wake up at 4 o'clock in the morning, and I have early mornings, and early evenings. But what's interesting is that, it's funny how when you think something is happening and how are you going to make this work, you find that, like things kind of work out. So around the time that, that I made this move to the Bay Area, a couple of our portfolio companies started picking up, and had already picked up actually, but they had some traction from US customers. And they also got investment from US VCs. So some of our startups are actually spending some time in the Valley. And so by me being here, I'm actually able to help them sort of build relationships and build traction here. And that helped because, just because of me being here, since in the last 10 months, we've had 3 of our companies sort of had follow-on investing from Silicon Valley VCs, which is, unusual and difficult to do, but, it's a relationship-driven business and it kind of worked.
That's great. And so how do you manage your work and lifestyle balance, right? It's kind of, you say you wake up at 4, it's 12 hours difference with Dubai.
Yes.
In a way, it's kind of what is your lifestyle like?
I'd love to tell you a good answer, but it's kind of chaotic, and it just means that you're working 24/7. But there are elements to it that I like. So Bay Area, the weather is just amazing. I find that it's different to Dubai. Dubai is a very networking and, social environment. And given how old I am, or, in terms of like me being in my late 40s versus, in my, 30s, it means that, I'm not sure I have the energy to keep up with that nowadays. So I guess this kind of works because I have early morning starts and early finishes. And, in the afternoons, I sort of like go have meetings with people here. And actually, I have walking meetings, which is kind of nice. So I have a healthier sort of lifestyle. And then I destroy that when I come to Dubai. Well, actually, no, I have actually, by the last time I was in Dubai, I was doing walking meetings in the Marble Walk in DIC. It was hot, so I was walking. I would meet people after lunch or before dinner, and then we just do this walking meetings, which are super helpful. I guess one thing I'll say is that you have to find ways to sort of make it work. I think that my life is healthier. I think I'm healthier. I'm eating healthier in some respects because I'm sort of going to bed earlier. I'm also spending more time with my girls, which is amazing. Yesterday I was doing something and my 8-year-old came and she immediately spotted something that I was going to sort of say, yeah, I think this is good, and going to move over. And she spotted something. And I was like, wow, like an 8-year-old spotted something that I missed in an investment opportunity that we were looking at, which was kind of, amazing. So, I mean, this is kind of great. The other thing that I do is I try to maximize my time here. So I think one of the things that I do, which I guess makes it harder for our investments that we do, it helps to be in the Bay Area because you see what good looks like. And you see what amazing looks like every day. And there's a bar, and it reminds me that the bar is quite high. And it's I like to believe in people. I'm an optimist. As much as I'm also a grumpy, cynical skeptic, I'm also an optimist. And when I meet people, I connect with them, and I like to sort of believe in them. And sometimes it's helpful to have this reminder to say, yes, you can believe in somebody, but they may not be ready right now. And, as much as you believe in them, there's a little bit more to go. This is not ready for investment. And I think, being here, meeting, smart entrepreneurs that have, built unicorns, scaled, and now doing something else, and the way that they operate and the way that is super helpful. It's also super helpful because then I can, connect them to sort of my portfolio companies, founders, get them some mentorship, but also push our founders to the way that they need to be pushed.
I guess the last question is why Middle East versus kind of, if you are in Silicon Valley and you have such an amazing network, why don't you guys invest in the best startups in Silicon Valley? Why Middle East?
Yeah, that's a great question. You know, I'm a pragmatist. You know, like Silicon Valley is a big, I'm a pragmatist. You know, like Silicon Valley is a big ecosystem, and there are hundreds, thousands of pre-seed, seed stage investors here. It is a very competitive market. By the way, and Sukna does invest, so we have different buckets. So Sukna Ventures is the fund that I'm on with Walid, and we do MENA digital infrastructure investing. There's another, Sukna Capital, where my old buddy Marvin, who was, who's actually on our IC, and Forrest invests with me in the MENA region, but he has another partner and they do global investing. So they do Silicon Valley investing. Answer that question from a personal point of view. So, if you're an emerging manager, and I would classify myself still as an emerging manager. If you're an emerging manager, you want to be, in the top quartile, at least, if not the top decile. And you want to believe that you're in the top decile, and hopefully you'll be in the top quartile for your LPs. That's where you want to be, right? And the question is, I had a very sort of pragmatic sort of look at Silicon Valley, which is an exciting place to be, but it's a very competitive place. And then you look at the MENA region, which is exciting, and it's nascent. It's still growing. It's like it's where I think, Silicon Valley was like maybe 20 years ago. So it's really early. And so I chose to be a bigger fish in a smaller pond, I guess. And part of this thing is also because of my personality. So I'm not very social media savvy. I don't do a lot of this stuff or other things. I kind of just I rely on my networks to introduce me to founders that are working on a problem. And that's kind of how this is how Silicon Valley venture firms used to work 20, 30 years ago. And that's how I like to work. I think I can still operate like that in the Middle East and get the best deal flow. I think it's impossible for me to do that in Silicon Valley. Here, everybody has to unfortunately work harder. And so, in my mind, I think that kind of works for me, but also the opportunity set, right? So, like in the Middle East, the one of the common complaints that I get is that, but where the unicorn's going to come from? So, I'm a pre-seed, seed stage investor. So, I need to worry about centaurs, not unicorns. So, if I can get, a few 100 million plus valuation companies, that is going to give me, because I'm coming in so early, I'm getting in at valuations that are so early and so low that I don't need to necessarily. Now, I'm not saying that I'm not aiming for every business we invest in. We believe that it has the potential to become a privately held $1 billion business. We believe that the market opportunity is there. But the point that I'm making is, as a pre-seed investor, I've already won by the time you get to centaur status, because I've already had multiple, return on my. So to me, it's like, there's that. And then the other thing is where I can add the most value. In Silicon Valley, as much as I said, about like me building confidence, I still have zero confidence in myself. But in Silicon Valley, there's so many people out there who can help you. In the Middle East, I feel more comfortable that, there are few people out there. So, I feel more confident and comfortable in helping people, guiding them in building their products.
And it's also easier to get to these corporates and help companies, right? Yeah. Because it's, you feel more connected there.
Yeah. And also, like, let's not forget, I spent 20 years in Dubai. I have a network. I don't have a very wide, broad network, but it's funny, like when I meet people from the Bay Area, friends of mine who come to the Middle East, they always say the same thing. This is like a common theme. They're like, "Oh, Asher, you know everybody." I'm like, "No, I know maybe like a few dozen people. Like I don't know many people." And they're like, "Well, then you know everyone that matters." So I guess my point is,
people.
or I'm known to people that matter. So I guess I like that. It's an environment that to me, I'm sort of like deep relationships versus wider relationships, and I built relationships in the Middle East, and now I'm leveraging those to help them and also to help the portfolio companies that
Amazing.
I'm working with.
Yeah, thanks so much for joining us and sharing your story. It's very interesting and kind of great insights, and I think there is some unique mindset in the things that you use in your day work. We would love to invite you to our VNTR Summit on November 13 in Lisbon. So join us there. And we are also coordinating some expert session for our club members soon.
Yep.
So thank you, Asher, for contributing to our success as well, and believing in us. Thank you, and thanks, Nico. So we will release the episode this coming Sunday, and we would love to get as many people to learn from you. Thanks a lot.
Thank you very much. Enjoyed being here, and happy to support the community.